Hey guys, and welcome back to the channel. My name is Rebecca Young from 5 to 9 Real Estate, and today I'm going to be covering off a real example of a property that I helped a client find, and I'm actually going to be walking you through the analysis in Excel. And I have to give a special shout out to one of my realtor partners, Paulo. He sent this over to me, which was a really nice change from this big beast of an Excel spreadsheet that I typically use for analyzing properties, but I find that this sums things up really nicely and makes it easier to understand comparing properties and the best investment that we can find. So thank you again for Paulo for that. I know this has been requested a lot, and I'm excited to go through this with you guys today. I want to lay some foundational topics in the channel just for those that are starting off from complete ground zero, but really excited to walk through an actual example with everyone today. If this is the kind of content that you guys want to see, please go ahead and like the video, subscribe to the channel. I really appreciate the engagement. So if anybody has any comments or any ideas for future topics, any other questions that you have about this, please leave them in the video below, and I will gladly address them in future videos. Without further ado, I'm gonna do a little demo to actually walk you through how I analyze properties. And I find that this view is actually a lot faster to put together and also to be able to analyze properties more quickly. So when, say, if you're going out for discovery days to go and see a bunch of different properties, it just helps you identify, just compare the properties basically to find the best options for you, so that you know when you find a deal that you can jump on it and that you're confident in that decision. So like I had mentioned, this was actually purchased by a client of mine. This was purchased in 2020, and the purchase price was for $540,000. So I'm going to break down the cost of acquisition and the monthly costs to help us determine what the cash flow is going to be, and then also to help us determine what we would want for extra cash reserves, for example. And then this is going to help us determine what the projected return on investment will be as well. So when I go through this was purchased as an investment property, so automatically we have to do 20% down. So if you needed help with down payments and wanted to understand that further, I did create a video there, so I'll put a little link here for those folks. From there, just so you're aware, there are also extra costs for acquiring a property. So we'll break this down here. Land transfer tax, in this case, this was not a first-time buyer that was on title, so there are calculators that you can use online. You can build them into your spreadsheets. I also did a video on how I came up with this number, but the number there is $7,275. And then for your legal, your home inspection and your appraisal, I put an estimated cost for that just so you're aware of them and you're bucketing for that in the cost of acquisition. So legal, $1,000, probably a little high to be honest. Again, want to be conservative and make sure that no one has any surprises. Your home inspection for this area, this property was actually in St. Catharines, so your home inspection for this type of property in St. Catharines will probably be around $400, and the same thing for the appraisal. So in total, for a $540,000 property as an investment, you should be bucketing to have about $120,000 down to acquire that property. And I would also recommend making sure that you have 3 to 6 months of cash reserves on hand as well, especially if you're just starting out, just so that you're fully prepared for anything that could come up. This particular property was actually already set up as a legal duplex and was already rented. So this is how, when I get into the next part here of the monthly cash flow and the monthly expenses that we're expecting, this is how we were able to confirm what those numbers are. So when I just scroll down from my spreadsheet here, so like I had mentioned, for your rent, that was already captured because the first unit was rented for $1,530, the second unit was rented for $1,450. So all in, the property was already receiving a monthly rent of just under $3,000. The first mortgage here, there's only one mortgage on the property. Their financing ended up being a little bit different, but as of that date, the numbers that you typically get from the bank were an interest rate of 2.2%, and with a 30-year amortization, that brought the monthly mortgage payment to $1,638.11. I'll also do another video explaining mortgages and all the different terms and how we're coming up with these numbers, but if you're just starting off, I'd highly recommend speaking with a mortgage broker first. They will actually give you these numbers. They will give you what you qualify for in an interest rate. They will let you know if you qualify for a 25-year amortization or a 30-year amortization. make your life easy for yourself, just go and speak with a mortgage broker first. From there, in terms of your property tax, we can actually see this from the listing. This is also information that we could have gotten from the previous landlord as well, because of course you want to keep track of all these financial data points. But in this case, so it's $209 a month for the property tax. Property management in this area, and I knew the property managers that were already in the property as well, but standard in this area, and frankly I always use that particular property management company, their rates are 8% per month. So that was already a given in this example as well. Your home insurance is going to be a little bit different for everybody. So this is an estimation for $120 per month in this case. Utilities were actually a given from the previous landlord, like I'd mentioned, from their expense statements that they provided as well. So in that case, utilities were $211 per month. Now, I always recommend that we have, on top of the cash reserves that we have on hand when we acquire a property, you also want to make sure that you are taking some of your rent that you're getting and you're also putting that into your cash reserves as well. Again, I just like to be conservative, and it's always better to save for that rainy day. You never really know what's going to come up. It's still an investment, it's still a risk. So one way you can mitigate your risks is by being prepared and saving on an ongoing basis moving forward as well. And it's just a 2% from your rent, your monthly rent, that you put towards repairs and maintenance and vacancy. So, it's pretty small sacrifice that will help you in the future if you need it. With that all said, when we take our monthly rent in this case, and we take the operating expenses that were basically just a summation of what was outlined here, and then that gives us with a monthly cash flow of $413.49 per month. And so it's a great property. It's a legal duplex. It's in an area that's still appreciating. And on top of that, you have monthly income from this property. So frankly, this is how I analyze if I want to buy a property, and anything that's cash flowing, that's producing income for me, I want to jump on that. Frankly, I don't really care what happens with the property value, if it goes up, down, sideways. For the time that I own the property, I want to just make sure I'm making money from it. So I thought this was a great investment. Thankfully, my client agreed and they jumped on it, and they're very happy with the property now. So my next little bucket here that I have in the spreadsheet is basically taking these numbers that we have from the analysis initially that I covered, and then basically just helping us determine what the ROI is going to be when we bucket in the cash flow, the mortgage pay down, and the appreciation. So here, the first piece is appreciation. I did cover a video as to why I use 4%, so I'll include a link for that here as well. But in this case, for this video, I'm just going to say I use an appreciation rate of 4%, and the Coles Notes is that it's a conservative number, and I'm very comfortable using that. Regardless of what happens, if there's any volatility in market values, I'm very confident that I can get 4%. So essentially what I do is I just apply 4% to my original purchase price at year 0, if you want to call it that, and then just extrapolate that out by 5 years. And then I capture it as the summation over here. And then I also I recapture the mortgage pay down. So because your mortgage is comprised of your mortgage principal and then also your mortgage interest rate, a piece of that payment is going towards paying off the loan that you have from the lender. So that's recaptured here because that's now available funds and equity that you have in the property. And then on top of that, we are also capturing the annual cash flow after 5 years. So when I take the full summation of these numbers, I get my total gain after 5 years is $195,634.82. So when I look at basically that gain on top of my initial investment, well, in this case, it was my client's initial investment, and also how I would analyze properties that I want to invest in, I get a return on investment of 167%. So obviously that's a fantastic ROI within 5 years, and very hard to meet that in other areas, especially your cash on cash return there. So this is a solid investment, and this is how I've been able to build my wealth over time, is by getting this new equity in properties and then being able to dump that into the next property that I acquire. So this is the quick overview of an actual live example of a property that I found and was sold to a client, and also how I look at properties myself. If this was of value to you guys, please go ahead and like the video, subscribe to the channel. If you guys do have any other questions, please, as I mentioned before, please leave them below in the comments in the video. I do take them into consideration, and it helps me plan out other videos I'm going to cover in the channel. So again, guys, really appreciate the engagement, and thank you as always for your time. And until next time, guys, see you soon.